Yeah, so all the good things Soban has told. So a lot of schemes, a lot of investments. So if it really happens, it is good for the country. So a lot of ideas are there. Now, how these ideas are going to be implemented, I think we have to see. Because if you really see what is happening last 4-5 years, things are not good. Till 2016, I think our GDP growth was really good. After the demonetization, we have just seen the slowdown of the economy, and with the pandemic coming in 2020, we have never really got up from the whatever low we had. So we are like having a free fall from 2016-17 onwards. So government is trying their best to again bring back those olden days, but then we have to see how far they'll be successful. Definitely after the pandemic, everybody says the world will be different, but we have to see how India is going to be in that different world. So, but definitely a lot of incentives are given for new industries. Let us hope. So coming to GST. So what are the amendments? There are very important amendments which has come in GST, which the finance minister will not tell on the floor while giving her speech, because these are not the good things to talk. So it comes in the fine print where you read, you get whatever amendments are there. So what I was, so this disclaimer is this proposed amendments are only a proposal. Many times it has happened, this proposal has undergone some changes, and the notifications now, some notifications of last budget of 2021 got notified only on this 1st January 2022. So it took 1 year for the notification to come. So these are only a proposal. Once the finance bill gets passed also, it has to be notified, and every state, because this is not only a central act, it is a state act where SGST acts are there. So if any changes in CGST has to happen, it has to happen in SGST also. So all the states in their assemblies also have to pass these amendments. So it is not going to be that easy and that fast. It will take its time. Few things will be immediate as soon as the finance bill gets accent from the president, but most of the things will take its time. Now, I was telling about the revenues from GST in my inaugural address. The finance minister actually spoke about this in her budget speech, though it was not part of the speech, but because the figures came on 1st of February, so she was very tempted to talk about it. So the collections, the gross collection, GST collection for the month of January was 1.41 lakh crores as per the finance minister, which is the highest till now from the date the GST came into from 1st July 2017. So this is the highest collections in a month. So what does that mean? So and she has also told it is because of a self voluntary payment as well as enforcement payment. So there are some things which we paid all voluntarily, and many collections happened because it was enforced by so many other means. So a combination of that, we could see a very good collection. And going forward, if you see from last 4-5 years or 4.5 years, how the collections have been increasing. Previously, even 75-80,000 crores also in a month, it was very difficult to get. But gradually, the collections kept on increasing, and today we could see a figure of 1.3-1.4 lakh crores in a month which is coming. And going forward, definitely I think within a year you could see this amount jumping to more than 2 lakh crores also. We don't know, but that is the intention of the government, and the amendments what they are bringing, the intentions are very clear. They don't want any leakage of revenue happening in GST. They want to use the technology to the core, and they want to harass the taxpayers less. See, that is the intention, but then on the ground something else may be happening. Intention is very clear. Technology has to be used to the fullest, so that if any differences, any errors, immediately system throws out and you get a notice. So what happens, even if a month or 2 months delay in filing returns or paying the taxes, you get a notice immediately. So you have to sit on you're in the hot seat where immediately you don't pay, due date over, notice comes, you have to pay. So I think leakages are going to be controlled in a very, very big manner in GST. It's very difficult to escape tax in GST. So definitely the revenues will increase. Today also we can see almost 50% of the transactions are outside the tax net. It is in the very informal sector, which over a period of time, definitely you can see they're coming into the GST, under GST, and the revenues will increase. And if you see the revenues increasing in GST, you can see, you can similarly find out, or similarly see the income tax rates also may be coming down. We don't know. There is always a rumor whenever there is a budget now, income tax may be scrapped. In today's situation, it is not possible for a government to scrap income tax because almost 12 to 13 lakh crores come from income tax. And it is not easy for any government to just give away that money unless the revenues from GST really increase to such an extent that even income tax revenues for the government will look very small. Till that time, income tax will be there. So definitely GST is going to be a main source of income for central as well as state governments. And the amendments what has come recently, last 1 or 2 years, it is in that direction where they want everybody to pay in time and loopholes, leakages will be arrested. So one major, so I will go in detail of whatever amendments have come. It is a major amendments. I have not taken the small things which has happened. So it is a major amendments what has come. So one major amendment is now they have added one more condition to claim input tax credit. So when the act got introduced, it was 4 conditions. From 1st January 2022, they added one more condition, and now they have proposed a 6th condition. Now, yeah, there are 6 conditions if this passes through the parliament. Now, what are the 6 conditions? Now, as on 1st January 2022, there are 5 conditions to be met to claim or avail the ITC. One is we should be having in possession tax invoice and debit note. The new condition which was introduced from 1/1/2022 was the supplier should have filed his GSTR 1 and the credit should be appearing in your GSTR 2B. So first is tax invoice debit note. Second is supplier should have filed his return in GSTR 1. You should have got credit in 2B. The recipient should have received the goods or services. So you should have received the goods and services to avail ITC. Tax should have been paid by the supplier. So the supplier should have paid the taxes and the recipient should have filed his return. So these are the 5 conditions you should meet now from 1/1/2022 to avail input tax credit. Now the 6th condition what they have brought. Now see where the government is coming. The 6th condition what they have brought is even though the credits are available in your 2B, it should not be restricted under section 38. So in 2B your credit will be available, but now they are restricting that credit available in 2B if it is restricted under section 38. Now what is section 38? That also is newly inserted. So section 38, now there are 4 conditions which you have to meet. Just see, you can, if you have to take the ITC, what all additional things you have to ensure it is happening. The supplier from whom you have purchased has issued a revised tax invoice within the prescribed time after obtaining registration. That means now, as per the registration rule, if you are liable to get registered, you should apply for registration within 30 days. Now, suppose, for example, January 1st, I am liable to get registered. Within January 30th, I should apply for registration. Now, what happens? I am eligible, or I should have registered as on 1st January. I got 30 days time, and I apply for registration on 15th January. I get the registration on maybe on 20th or 25th of January. So this period of January 1st to the time I get the registration, I am supposed to do business, but I cannot issue a tax invoice because I am not registered. I only applied for registration. So you can issue a normal invoice, and within 30 days, if you apply for registration and you get the registration, within 30 days of getting the registration, you have to give a revised tax invoice where you mention your GST number and you issue a tax invoice. So as a recipient, you have to ensure that revised tax invoice is issued by the supplier and correctly uploaded in GSTR1. So this is the one condition which a recipient has to ensure. Recipient has to ensure the supplier has not defaulted in payment of tax. Now, God forbid, how a recipient can ensure a supplier is paying tax. So this is one more condition where a supplier has to pay the tax, then only you can take the credit. Look at the third condition. Supplier has paid less tax compared to the tax declared in GSTR1. That means GSTR1 he might have declared some tax, and in GSTR3B he has paid less tax. In this situation also, you are not supposed to take the credit, maybe proportionate credit. And the fourth condition, supplier has claimed excess ITC. So 2A's 100 rupees is there. He has claimed in his 3B 120 rupees. He has claimed excess of what is appearing in eligible ITC available in 2A. He has claimed excess. So now, as a recipient, you have to ensure your supplier pays the taxes. Supplier has given the tax invoice properly, revised tax invoice properly. Supplier has taken the ITC properly. So everything a recipient has to see. Now, today's system, it is very, very difficult to find out whether the supplier has paid taxes or supplier has claimed the ITC correctly. So maybe a system may come in future where you can check all those things, but it is becoming a responsibility of the recipient to ensure the supplier is compliant with law. I don't know how far it will be. Definitely this will be challenged in the court of law, and how the high courts and supreme courts are going to take it, we have to see. So if this section 38, any one of the conditions, if supplier is not met, you cannot take the credit as per the new condition mentioned in section 16.2, that is 6 conditions what is required to avail ITC. This is one good part where now they have given an extended time to claim ITC. Now for a financial year, if you have to take an ITC, the maximum time period was till the return of filing of September of that financial year. So if 2021 was the financial year, we could have taken the ITC pertaining to that year to maximum till the September 2021 return. That is 20th October 2021, you file September return. So you had time till 20th of October 2021 to claim the ITC. They've extended that date till 30th November. So it is not October return or November return. What they have taken that September return word and put as 30th November. So if you claim the ITC for the previous year, you have got time limit till 30th November to claim that ITC. Cancellation of registration. Here there is a again change. As everybody knows, a composition taxpayer. Composition taxpayer means whose turnover is up to 1.5 crores. He can opt for a composition taxation where a percentage of the turnover will be taxed. Since that GSTR4 return form also has made an annual form. So the previous act was to be filed quarterly. So the cancellation could have been done by the proper officer if the returns were not filed for the 3 consecutive tax period. Now, since it is a yearly one return, GST1, they have told within 3 months from the due date of filing of the return. So GSTR4 due date, whatever is there, within 3 months, if you don't file, your registration is liable to be cancelled. So regular taxpayer, as per the original law, see, this is all coming out. Why? Government is not allowing you a little way also to delay filing your return. They want your returns to be filed in time. So if you see the original provision of law, your registration can be cancelled if your returns are not filed for a continuous period of 6 months for a regular taxpayer. Now they have amended and removed this 6 months, and they told such continuous period as may be prescribed. So tomorrow in the GST Council meeting, they may decide and come with a notification telling even a 1 month, 2 month time period also can be prescribed and your registration can be cancelled. So The time limit now used to be 6 months. Now it is prescribed and it will come as per a notification. We don't know what is the time period now. Again, issue of credit note. If you have to issue a credit note for a invoice, credit note is when you're reducing the amount of the invoice, maybe for 4 reasons what they have told. If your taxable value is more, if it is rejection. So there are 4 conditions and the value of the invoice is getting reduced. Credit note can be issued up to September of the next financial year. So that also now is changed to 30th November. So you can issue the credit note, reduce your tax liability, but it is allowed till 30th November of the following end of the financial year. This is one more very important amendment, which they have deleted GSTR 2 and GSTR 3 now. So originally when the act came, GSTR 1, GSTR 2 and GSTR 3 was formed. Because of the software issues, they could not implement GSTR 2 and GSTR 3. It kept on postponing and they kept it to abeyance permanently. And lot of provisions was actually of the law was actually connected to GSTR 2 and 3. So they had a lot of issues in that. So now what they have done is they have deleted GSTR 2 and GSTR 3. So there is no more thinking of GSTR 2 and GSTR 3 coming back. So there is a GSTR 1 and there is GSTR 3B and 2B to check the input. So that is the 3 forms available now. Other 2 and 3 is deleted. So all the related provisions of GSTR 2, GSTR 3 like Rule 42, 43, all those also has been deleted. So I'm not going into detail of that. GSTR 1 can be amended now by 30th November. The previous date was 30th September return. Now GSTR 1 can be amended by 30th November of following the end of the financial year. So this year's GSTR 1, you have got time till next year November to amend. And you cannot file a GSTR 1 of any previous, if any previous period GSTR 1 is not filed. So you cannot file a GSTR 1 if your previous period GSTR 1 is not filed. Non-resident taxpayers, their return has to be filed by 20th of every month, subsequent month. Now that has been brought to 13th. Now look at this provision. Reversal of ITC if not paid by the supplier. So this was one of the conditions in section 38, where you are not supposed to take credit if he has not paid, supplier has not paid the taxes. Now, if you have claimed in your 2B and you have, it is come in your 2B and you have availed and utilized, you have to reverse the ITC claimed and pay with interest. So after 2-3 months, suppose you reverse, the 2-3 months interest has to be paid. So look at the funny part, where if the supplier has delayed in payment of taxes, he has to pay with interest. Here ITC I reverse, that also I have to reverse with interest. So there is a double bonus for the government, where interest is paid by the supplier, interest is paid by the recipient, and government is happy. Supplier and recipient are fools. And good part is he can claim the ITC once supplier makes the payment. So if supplier makes the payment, since he has reversed the ITC, supplier makes the payment of taxes, again the ITC can be claimed by the recipient. There is no time limit. I presume there is no time limit of claiming the ITC. Even if the supplier pays the ITC after 1 or 2 years, the recipient can take the credit. Transfer of electronic, so you will be having some funds in your electronic cash ledger. Now amendment has come, you can transfer that cash ledger to your other unit, maybe within the state, outside the state, but the same PAN. So the same company, same PAN, you can transfer the cash available to the other unit. This is also will be challenged. Definitely it will be challenged in the court of law, where they are restricting the use of electronic credit ledger. So there is a new subsection under section 49 which has been inserted, which says the GST Council has got power to restrict the usage of electronic credit ledger. So that means your output tax liability, they can restrict how much can be used from credit ledger and how much compulsorily you should pay with cash. Now, there is a rule 86B which was brought in. This 86B, even though the Act did not give power, the rule restricted the usage of credit available in electronic credit ledger up to a extent of 99%. Now, 99%, this rule was applicable only if your monthly taxable value exceeds 50 lakhs. So if your monthly taxable value exceeds 50 lakhs, 99% only can be adjusted against electronic credit ledger. 1% compulsorily has to be used by cash. This is actually challenged in court, and in many court these cases are pending. So government has brought in this amendment as an afterthought, so that even if they lose the case, which most probably the government will, so to ensure the provision of Act is there to bring such rule, to bring such Act and such restriction, they have brought this subsection where they have told GST Council can restrict the credit ledger. So we don't know how much, so that GST Council will bring as a notification. But again, I feel that also will be challenged, because credit is it's your right, and as per the Constitution, you can the government cannot restrict the right. Interest on wrongful availment of ITC. This is also one controversy which has been settled now, where there used to be the previous words used were input tax wrongly claimed. So there were many situations where the ITC was availed, but it was not utilized. And since the word use was claimed, so claimed, whether it meant availment or utilization, was always a question. Now, with this amendment, government has very clearly told if the input tax credit is wrongly availed and utilized. So if you are availed, that is, it is lying in your credit ledger, but you have not utilized it, you have not used it against your output, that means interest need not be paid. So there is amendment in that section where input tax credit wrongly availed and utilized has been clarified, and the interest also in that section, before it was 24%. Now, effectively, they have brought with the amendment, the interest rate down to 18%. So now the interest will be 18% if you wrongly avail and utilize the ITC. And this is the retrospective amendment. So this is a retrospective amendment from 1/7/2017. So if any taxpayer has already paid taxes at 24%, they can claim the refund. These are the few things which I thought, see what changes what I have told was proposed in the budget, but there are few things which I got another 2-3 minutes. I will highlight some very important changes come from 1/1/2022. Now see, this is all brought in so that the supplier files his return in time, recipient takes his input correctly. Now what has happened is, most of the time, this fake invoicing which has been regularly coming in the media, there are many taxpayers who register a bogus company, issue fake invoices, file GSTR 1, and they don't file GSTR 3B. So GSTR 1 is filed, the person gets GST credit, he takes the credit, adjusts against output, again he passes on that bogus to somebody else. So it's a chain, so very difficult to find out. So now whatever amendment they have brought in is basically to avoid this fake invoicing. So if you see, ITC available to a recipient only when supplier pays and files GSTR 1. So he has to file GSTR 1, auto-populated 2B. No provisional credit is available. Before that, 20%, when it was Rule 36(4), they say there was a provisional additional credit you could have taken, whatever is available in 2B, of 20%, which brought down to 10%. Then 1/1/2021, they brought down to another 5%. So now from 1/1/2022, no provisional credit. So whatever available in 2B, that credit only you can get. So registered person can't file GSTR 1 if not furnished 3B for the preceding month. So this is what I was talking about. So if you have not filed your 3B before, you cannot file your GSTR 1. Similarly, if you have not filed any GSTR 1 before, you cannot file your GSTR 1 now. So the systems are in place where the previous month, if you don't file your 3B, cannot file your GSTR1. This is all to restrict the fake invoicing. Recovery of self-assessed tax without show cause notice, a very, very, very draconian amendment which had come in, but government gave a clarification on this where they told, now the provision is if you have filed a GSTR1, suppose with 100 rupees, and you pay tax of only 80 rupees in 3B. So 20 rupees you paid short in 3B. Without show cause notice, recovery can be done. Recovery in the sense, they can come and take that money out from your bank account. So without issue of show cause notice. So if there is a difference found in GSTR1 and GSTR3B, immediately, without any time limit, 20th is the return, you file your return, there is a difference, 21st itself, government can come and take out the money from your bank account. So that much power this section had given, but government came with a clarification. We will not take the money like that. We will give you an opportunity to explain. And after a proper explanation received from your side and after giving a proper time, then only recovery proceedings will be done. So this is only a circular, this is not a law. So we don't know how far the department will abide by the circular. Anyway, they are required to follow the circulars. So this one relief is there, but this provision is there active where if there is a GSTR1, if you do a mistake, suppose you by mistake instead of 50,000 rupees, you add 2 zeros and 50,000 becomes 50 lakhs. And GSTR3 you pay only for 50,000. Balance amount, immediately recovery proceedings can be done. So this is the very, very dangerous provision. And one more, which I don't want to dwell too much about because that will take a lot of time, is GST leviable on services provided by clubs association. So government lost a lot of cases in the court. The famous case of Calcutta Club in Supreme Court and Rotary Club. There are 2-3 other very important judgments which government lost. So they have amended the law itself so that any services, so it is not services, actually it's any transactions between the club and members now will be taxed. So with this, I close my GST amendments. So these are very, very, I think this is a way of life now. And GST is going to be the main revenue source for the government. So government doesn't want to give even a little bit of leeway of losing the revenue. And they want to screw up all the culprits who actually run away with a lot of money. So that is the reason you can see the tightening of a lot of provisions. And there are a lot of relaxations, like now there is no audit required, and going forward, I think everything will be self-assessment based, technology based. If you do any mistakes, you can see immediately notices coming. If you don't do any mistakes, definitely nobody will ask you. So ensure you do very less mistakes while sending the goods through e-way bill, tax invoicing, filing returns. If you do less mistakes, you will be in a good place to stay and pay taxes properly. So with this, I close my session. If any questions are there, definitely you can put it in your chat box. So I will be happy to answer. Now I give my session to